Hello, my friends. Brett Pattison coming at you from the financial capital of the West in this beautiful new year that is 2024, Brian.
2024. Welcome 2024.
Hey, and welcome to the podcast.
Yeah.
We got a lot of fun things to share with you today, folks. We want to take a look at 2023 in review. We want to remind people of our core principles. And we want to tell people how PhDs are dumb. And how smart our clients are, right?
I don't know if they're dumb, but
That's a little harsh.
wise.
They'll understand.
Maybe
wisdom is the application of knowledge.
Yeah.
Right?
Exactly. I think it's lack of wisdom.
Knowledge. Yeah, lack of wisdom. All right, I like it. All right. So what are we talking about? Let's go back 1 year. The end of December of 2022, the S&P was trading at 38.39 on 12/31 of 2022. The consensus, the smart people, the PhDs came out and they all have like predictions and they predict, hey, the S&P is going to do this over the next year. We're going to close at this level. Consensus across the board was an average of 39.50 on the S&P. So really, we call that unchanged.
Yeah.
They didn't think anything was going to happen. Everyone was super pessimistic. The Fed was saying it's going to be higher for longer because they have 400 PhDs over there. 400, right?
Yeah.
That's a lot.
I think it's around 400,
Yeah. Smart people, not wise people.
Yeah, they're definitely book smart.
So a lot of pessimism as we started last year. We looked over to our clients and we said, hey, clients, let's see how you do versus the consensus. Let's see if you do a better job at predicting the S&P 500 over the course of the year than the experts. Consensus for our clients was an average of 41.65. So a little bit more optimistic.
Yeah.
Not a lot.
But better than the PhDs and the academics.
Exactly. That's what I'm saying.
And the market forecasters I think we've talked about predictions and forecasting and how it's really kind of a silly exercise. We did it last year just to really kind of prove a point and just say, listen, these guys, nobody knows, but we can look at market statistics and data and things like that
to help guide, but nobody knows.
Nobody. I mean, if the smart people, the so-called smart people, went into the year pretty pessimistic and down, and we all know that just a lot of times they're absolutely wrong. They're just not right.
Well, guess what though? There was one person who was pretty smart last year.
He's got a lot of wisdom.
We called him on the phone the other day and we said, hey, brother, you won the client contest. His name, I hope he doesn't care if we share his name. Warren Beers. Nailed it. And I didn't nail it, but pretty darn close. We
offered him a job as well, right?
The S&P was up last year 24.29%, which was an outstanding year.
Oh, yeah.
The NASDAQ was up 53.79%, which was crazy. The S&P finished at 47.69. Warren Beers was at 4,800. Congrats, Warren Beers. We've got $500 coming your way for throwing the best dart at the board.
It was fun. It was a fun thing. It was fun to kind of keep track during the year. And, of course, let me just say that Brett won the office pool. Brett was pretty right on. So
I was
congrats.
A little bit more optimistic than Warren Beers, but not.
But you were pretty close.
Yeah.
Right on.
Yeah, so I won the office pool, but I'm always optimistic. But so here's the question, Brian. Why does it pay to be optimistic in the market versus pessimistic all the time?
Well, I think anybody that's ever bet against America has been wrong. I mean, it's always pays to bet with America, bet with optimism. We have a great economic engine that keeps chugging along and moving forward year after year after year. Now, yes, we have periods of time where we slow down, or where we, the economy's in the emergency room. We had that in 2008, 2009. But we recovered. We have great doctors, and the great doctors are. It's not the PhDs. It's just the American work ethic and ingenuity and people that want to get ahead, and that's what America is. That's what we've been built on. And to bet against that, I just don't think it's still ingrained into our society. And people come to America for opportunity and want to do well and better themselves, and that's what America is. And so betting against that is just a bad bet.
Amen, brother.
Yeah.
That's exactly right. And you look at the businesses that we own. Why wouldn't we be optimistic with the businesses that we own?
Right.
We want portfolios.
We want to own best businesses in the world, and I feel like we own. I really feel like we've accomplished that. I mean, of course, we're always out looking for the next best business, but we own some great businesses, and you want to own businesses and not trade them, not rent them, but own them.
Yep.
Yeah.
Yep. Well said. So tell me this: the Fed last year, as we ended the year, as we continue to talk about 2023 and wrap up 2023, the Fed said they're going to keep rates higher for longer. That's what they kept saying. Of course, at the end of the year, we find out they're full of crap because they reversed that policy. But what did interest rates do last year?
It's really interesting. I was looking at the data a couple days ago, and we started the year, or the beginning of 2023, the 10-year Treasury, and that's kind of the one we kind of watch. Yeah. That's a good proxy for the overall economy, is the 10-year Treasury. Short-term rates is not really determined so much by market forces, but by the Fed and their policy. And but the market, the 10-year Treasury is determined by the market, by investors. And we started the year in 2023 at 3.88%
on the 10-year.
On the 10-year Treasury. Okay. And I was updating some data and things, and I noticed I noticed that we ended the year at 3.88%. I couldn't believe it. I thought that's got to be a misprint or something.
So no, wait. The fear of the Fed, the higher for longer, all of that. That's all we heard last year.
Yeah.
And the 10-year was unched.
The 10-year was unchanged, and which is interesting because that just tells you the market forces are, they don't see things, I think, right in line with what the Fed is saying. The markets tends to be pretty smart, and I would put my money behind the market, more so than these 400 PhDs.
Yep, absolutely. So let's look to 2024. 2023, amazing year, up almost 25% on the S&P. Our portfolios did, if you're invested in all equities, did better than that. Great year. We'll never guarantee anything the next year, but yeah, it was a great year.
It was a great year. We kept coming off of 2022, which was a difficult year, tough year. The NASDAQ was down plus 40. The S&P was down almost 20 or so, and had a big rebound, which was a big surprise for most investors last year, market forecasters.
Bear markets provide opportunities when they come back, when the market comes back. It's not if, it's when.
Right.
That's where you can create wealth. Yeah. And that's what happened last year. That's the summary, right?
Right, that's what
happened last year. So as we look to 2024, it's important that we remind everybody of three core principles that we have. And then we'll talk about our predictions for 2024, okay. which these principles that I'm about to mention don't go along with predicting 2024. So we'll guide you through that.
But it's fun.
It's a lot of fun, and our clients love it, and they can win $500.
Yeah.
So The first principle, Brian, I'm going to read, you're going to tell me what it means. We are long-term owners of businesses as opposed to speculators on the near-term trend of stock prices. What does that mean?
I mean, I just kind of talked about that a little bit. We own stocks as opposed to rent stocks.
And I don't want to correct you, but we own
Businesses.
Yeah. And that's the mindset that people need to get in. We own businesses.
I mean, that's exactly right. We don't like the word stock. We use the word because that's just the general.
It's common. Yeah.
It's common. A stock represents ownership in a business, and that's all that is. But yeah, we like to use the term business. We own businesses. We don't rent them, meaning we don't trade them. We own them for 3 months because we think it's going to go higher and then sell it or, something like that. We want to own businesses that will be rewarded by owning that business over a period of time.
So if you see a sector or industry that's hot for the first 3 months of the year, great. Great.
We're not chasing
that stuff.
No.
We reviewed a portfolio of an advisor that chases returns for his client. Mm-hmm. Oh my goodness.
Yeah.
Those returns, they were awful. All right.
I mean, just to comment on that, talking about chasing returns, what we don't do is change our strategy because this stock was hot last year, that stock was cold or whatever. We follow a process, and we talk. Well, I'm not going to talk about it here, but our clients know that process, and we just follow that process, and the returns will come. We fully believe that returns will come over time by following the process and not by chasing last year's hottest stock. We're just looking for great businesses, buying them at great, good prices.
And that is the exact same thing with options trading too. If you're disciplined to the process, the results come. I hate knowing how many trades we've won in a row or anything like that, because if you start looking at returns or win streaks or anything like that, it skews your mind.
Yeah.
Stick with the process, right? We're long-term owners of businesses, not speculators. Number 2, and this speaks to Spencer and Matthew in our financial planning process, long-term investment success most reliably depends on making a plan and acting continuously on that plan. Spencer builds a plan for people. Matthew builds a plan for people. Here's what you need to do year in, year out to accomplish your financial goals, whatever they may be. Just keep doing those things. Don't be disciplined, right?
Yeah, they come out, Spencer and Matthew, they give you a plan, you stick with it, ignore the market, chatter and noise, and because they're accounting for market downturns and upturns and so on in that plan. Focus on what you can do. That's the thing about, also when you think about it, you want to focus on what things that you can control.
That's a great point.
One thing you can't control is the market, what the market does this year or last year. But one thing you can control is your behavior and how you stick to the plan. You have a savings program, saving a certain percentage of your income every year, reducing debt, planning for retirement, those sort of things. Those are things that you can control. Wasting time on things that you can't control is obviously not a good approach.
Yeah, well said. Well said. Number 3 and the last one. An investment policy based on anticipating or reacting to current economic, financial, or political events most often fails in the long run. I would say almost always fails in the long run. And I say that because 2024 is going to be a very noisy year.
Yeah.
We've got elections coming up, right?
They're always noisy, but this year will be even noisier.
Yes, this is going to be such a noisy year.
Yeah.
For us, we don't trade based on or invest based on any of that noise, because that's how you fell. And so as we go through 2024 and you hear all this noise and all this fear, and this candidate's going to do that, and that candidate's going to do this, and that candidate has 8 eyes or whatever it may be.
And if this candidate wins, then this will happen.
Yeah,
If that candidate wins, then this, won't happen. It's just silliness.
Yep. That's one thing we will not do.
Yeah.
That's the 3 principles that we want to remind everybody as we move into 2024, right? That said, we have no idea what the market's going to do. We don't even care what the market's going to do because we're focused on the businesses that we own and that you own.
And what will happen is Brett says we don't care what the market will do. Well, we're gonna react to what the market gives us. Opportunities.
Yep.
If the market gives us some opportunities, then we'll. But up until that point, we're not. It's not going to affect us. We're just going to stick to our process, and from time to time, the market gives us great opportunities. Last year at
2022,
during 2022, we had an opportunity to, buy businesses at better prices than we did in 2021.
Yep.
So yeah.
So with that said, what we want to do is the consensus, by the way, for 2024, and I'm talking the smart people, the PhD economists, all those people, think the market is going to be around 5150. We close the year, right now, we're trading right around 4,600. We're down a little bit to start the year. They think we're going to be at 5150. That's consensus.
Okay.
The question is, what do our clients think? So we want to do the same thing we did this year. Warren Beers, if you win again, we might reach out for a job. But respond to the link in the email. Give us your best shot of what you think 2024 is going to be. And we'll see who wins. And $500 again for the winner. We will also do that in our office pool as well. And we'll see who wins at Irongate Global, which is fun.
Yeah, it should be fun.
But it in no way represents our process. Remember,
no, it's not going to affect how we invest portfolios because Warren, sorry, buddy, but we're not going to change our investment process depending on
on his pick,
on what you say the S&P is going to do this year.
We're just me, or you.
I mean, that's the thing. You had a very optimistic view going into 2023. But that didn't change how we did things. Not one bit.
No.
Not one bit.
Nope. Not at all.
Yeah.
Well, Happy New Year, everybody. It was a great 2023. Looking forward to even a better 2024. Appreciate you being great clients of Irongate. Another year down, another in front of us. So thank you very much.
We had an incredible year, and thank you to our Irongate staff. Katie, thank you, and your team. We just had a great year, and Irongate's doing great, and appreciate. We couldn't do it without our customers and all of our Irongate staff and employees. Yeah.
Well said, Chairman.
All right.
I like it.
Yeah.
Until next time. Bye now.
Bye.